What's that? Who there? Whoa.
All right, guys, I've got Kendrick Nguyen here, the co-founder and CEO of Republic. Kendrick, welcome to the show. Thanks so much for doing this.
Thank you so much for having me. Really excited for the conversation today.
Likewise. So I've been looking forward to this for a long time. And after researching a ton on you and Republic for this episode, it's clear to me that democratizing access for investors is one of your personal North Stars and of the company as well. And I share an interest in that vision. And so I think, the technology innovations that we're seeing in financial services and investing, as well as crypto, are going to significantly enable this in the future. And you're in the mix there. So it's really exciting. And I'm pumped to dive into it. So let's just start with your background a little bit. So you have a super interesting background. You've worked in a variety of legal roles. You were at AngelList, and then you ultimately started Republic. Can you just walk us through that background and how you started thinking about wealth creation, investing, and how it led you down kind of the crowdfunding rabbit hole?
Absolutely. I started out as a securities lawyer in New York, working for a pretty well-known law firm in the tech space called Goodwin. And after that, transitioned over to a legal role at a very large hedge fund, and then went back to academia at Stanford for a couple of years. But throughout that phase, meaning after having graduated from law school, the notion of like wealth and finance was still very far-fetched. I didn't take economics in school, and yes, about you should put your money in like a mutual fund or index, but it was like a thing you should do as a responsible adult, but it wasn't an exciting thing for me. Now, in the headline news, when I grew up in the Bay Area, my family immigrated there. There was this thing called tech and venture capital, and it sounded really exciting and sexy, but obviously completely out of reach. So somewhere, I think subconsciously and increasingly consciously recognizing that, hey, the ability to invest and back a company is a really meaningful, engaged thing to do, particularly if you use products of that company, that startup. And so it doesn't have to be boring. The question here is, but no one can get access. So how do you access all of these opportunity? And it's a convoluted way of saying we got to be able to combine passion and the desire to generate a profit rather than bifurcating these two worlds for everyone. And I think even until now, most people don't know that they can and should invest early.
Yeah, absolutely. I think the most obvious example that comes to mind is like early days of Uber, 2010, 11, 12. People were taking Ubers and were realizing, wow, this is amazing. This is going to disrupt everything. But there was no way for them to get access if they wanted to invest. And so that's one of the things that you're trying to change, which is really exciting.
And imagine Lyft, which launched even before Uber. Everyone knows that the drivers and the passengers used then and even now the two apps interchangeably. Imagine in the early days, anyone who has spent $1,000 riding Uber or have driven 100 trips would earn the right to invest $50 or receive $50 worth of equity. Can you imagine the loyalty and the customer engagement effect that would have? That wasn't legal then, but now I think that's the future.
Yeah, it's an amazing time to be involved in early stage as well. So let's shift to the origin story. So you gave a little bit of your background, but I'm curious to press on, and we'll dive down specific threads in a second. But just broadly, walk us through the process of how you thought about Republic and initially got it off the ground, and what those core values were going to be as soon as the laws changed. And maybe you can provide a little background on that in 2016. How did you think about differentiating, what Republic would ultimately become from the traditional way people thought about private investing?
Yeah, so first and foremost, let me describe a little bit about my journey through AngelList. I left Stanford to join AngelList, their general counsel, when they first launched the syndication product. And many of you listening may not know or be intimately familiar with AngelList, but essentially they allow millionaires to invest into startups because even millionaires did not have any access, right? You got to be like ultra high net worth, like Peter Thiel of PayPal, in order to invest a decade ago. So AngelList allow millionaires to pull their money together and invest. Now, during that time, under the Obama administration, they changed the law. And so since the Great Depression all the way to 2016, it was illegal for a company to accept anyone that's not a millionaire by and large, unless they're a publicly traded company. Meaning, no startups, no restaurant, no small business could accept friends and family capital in that fashion. Didn't make a whole lot of sense given that, people, non-accredited, spend thousands of dollars in the casino and buy thousands of dollars worth of lottery ticket with high risk, total loss. And so the law was catching up to it, and the Jobs Act passed. So in May of 2016, it was the first time in 80 years of American securities law that a private company, whether a restaurant, a startup, small business, anything that's private, would be able to raise from the general public without undergoing the exorbitant cost of going IPO under a legal framework called regulation crowdfunding. We call it, equity crowdfunding or micro investing, but that's the notion of retail investing. Now, that is a very heavily regulated business model because imagine now you're allowing anyone and everyone to invest. And at one point that was, raised the risk of fraud, right? So the law is very onerous in all of the requirements that apply. AngelList was not able operationally to undertake this model. And the excitement about that is that I saw what AngelList did to the venture ecosystem, even when it was only able to deal with millionaires. And the conviction is that the imagination, the hope is that one day you're going to have hundreds of millions, if not billions of people investing across country lines and border lines, $5, $10 each into companies that they believe in. And I think out of that, you naturally going to have a much more inclusive innovation ecosystem globally. And I think the notion of access and wealth, parity or the lack of disparity, the opposite of that is gonna rise. But the industry didn't exist then, and it's still in the early days now. But we've gone a long, long way since 5 years ago.
Yeah. And so one of the things, about Republic that's so attractive when I dove into it was you have this really broad product mix. So people, I'm sure, have explored various crowdfunding platforms, others that no free ads, so we won't mention any by name, but they do the traditional equity crowdfunding and that's it, right? But with Republic, you've got the core portal where a public investor can invest in private deals. You've got the accredited only deal room, similar to AngelList kind of. You've got the real estate portal. You've got crypto. You've got the video game portal. And you even have like an autopilot product, which kind of functions like Wealthfront or one of these robo advisors that allows you to invest in private deals. And I love the breadth there. So can you just break down, like, as you thought about product strategy over time, I'm assuming you started with kind of the core public market investors could access private deals and then added on. How did you think about strategically adding those different products? Like, where'd the insight to go into those verticals come from?
The insight probably came from observing and my own personal experience buying things online. Right, we at one point went to different sites to buy different things. You wanted toothpaste, you went to a different site. You wanted to buy a T-shirt, you go to a different site. And the convenience of a one-stop shop, an old thing platform like Amazon, was incredibly valuable because it simplified the user experience. And not only that, people, if you are building a business model that is meant to include everyone everywhere of all income net worth, and really believe that there's that product market fit in terms of their larger vision, then you gotta have a range of diversity because people are different. There are people who love real estate, there are people who love tech and innovation, there are people who love loans. I mean, that's not my thing, but people love lending and receive 8-9% interest back. I mean, you saw the success of Lending Club and Prosper. So when it comes to investing, given that our mission is to make sure that whatever it is that people are passionate about, that there's power to their dollar and that they should put it there. Now, so that general thesis, I think, is probably generally agreeable. The difficulty is the execution of it. It is exceedingly difficult to even just build one vertical, let's say tech or startup, in an industry that didn't exist. So to tackle on and add on real estate and add on crypto and all of that is something that for many VCs that they look at that, they'll be like, these guys are being too distracted, spread it too thin, not going to be able to make it. We're not going to invest. And we managed to at least show that we're able to do that, even though we're still in the early days. But we right now, I think, are the only multi-asset investment marketplace in the United States and possibly in the world. The only place in the US that you don't have to be a millionaire to invest $200 in residential real estate. The only platform that you can invest compliantly into securities token if you're a non-accredited investor in the US, and the list goes on. But again, this is 3 seconds into the whole new day. So we're a little unique in the market place, but certainly too early to say anything about success or winning.
Yeah, we're definitely in the first inning for sure. It's such an exciting time. One of the things I wanted to ask you was just around investor sentiment in some of these younger generations, millennial, Gen Z. I think we're living through a crazy time right now. Things like the meme stock craze earlier this year with GameStop and AMC and other stocks is really shining a light on the shift in the way that younger investors, retail investors are putting their money to work. And so what I'm curious from your perspective is, how does that translate to you thinking about building a product and a platform that caters to both this kind of younger crop of investors who responds and prioritizes different things like instant gratification, social dynamics, climate change, compared to, and then also catering to, a crop of older, more traditional investors? And it doesn't just have to be age-based, but there's a bifurcation in behavior for sure.
That's a great question. On the one hand, on the Gen Z and millennials and the trend toward being more engaged with the world around them and connecting all of their activities into their personal construct, like, the people who care very much about climate change and want to not only spend their money buying things that are climate friendly, but now wanting to invest, whether publicly or privately, into that. So we were even slightly ahead of that trend. And obviously the focus on Republic and our future model is very much on that retail revolution driven by the desire to be more engaged with the world around you. Now, the familiarity with technology would vary between different age groups, generally speaking. But I think the desire to be engaged with the community around them, I think that's universal. So the question here is for older generation. They, of course, generally speaking, maybe a little bit more risk averse. Generally speaking, probably care about things that are more immediate. And so the importance of products like real estate, because it has a near-term liquidity timetable and you don't have to wait for 8-9 years. That's why we introduce the diversity of choices onto our platform. And we feature deals that are late stage. You're not going to get 100x, but you're not unlikely going to lose all of your money if you invest $50,000 into SpaceX or Robinhood, which were deals that were featured to the more high net worth segment of our investor base. So I think at the end of the day, it still comes down to understanding the desires and the profiles of your user base and deliver products that meet the subset of your user base. Very rarely that you have one business that is universally attractive to all, like Uber. But even then, they started rolling out Uber Black, Uber Pool, validated different model. So in our business, when it comes to investment, the 15 or so types of product that we have, or ranges of product that we have through the Republic ecosystem, I have no doubt one day you can have 100 or 1,000 of them.
Yeah. And a question I had specifically, so I'm glad you brought up, you've had SpaceX, Robinhood, Carta, some massive companies that are unicorns already on the platform. And a question that I had, so, some people may not know that you guys raised a portion of their round on the platform. I think, and correct me if I'm wrong, but the important distinction is that those deals were done kind of on your accredited only portal of the platform. And so what's interesting is I'd be doing a disservice to the non-accredited investors if I didn't ask this question. So I'm just curious from your perspective, if the mission is to truly democratize access to everyone, like any public investor could get access to the best deals, why are some of those only on the accredited specific portal and not accessible to the general public?
This is a super fair question. The answer is this. If I can turn a switch or snap my fingers and boom, every single company, large and small, all of a sudden are passionate about including their community members, that'd be amazing. Then you essentially enable me to expedite the path of the industry and Republic 50 years forward. The belief is that eventually, even the most mature company would want to engage their community members, but it takes time because the law requires different things for companies if they want to accept non-accredited investor. So the more later stage, the more growth stage or mature that a company may be, the more onerous the requirement to turn their financial into GAAP, to file a form with the SEC, to get permission from their board. Like, so it's a really convoluted process. That's one. So our thesis is that if we can convince them to even just come to Republic and open them up to a smaller subset now, at least we get to be an investor. At least we get to show that, all right, this small subset still provides so much value. So maybe a year out, you should launch a campaign that's open to everyone before you go public. So it's essentially a very long, sales cycle in order to attract and convince. And our hope is that one of these companies, whether it's SpaceX or Carter or Robinhood or Pipe or Klarna, these are all companies within the Republic ecosystem, would eventually come to do a crowdfunding campaign on Republic.
Yeah, and that's a great response, because that was, you know, the whether it's good or bad, I feel like one of the narratives that's always been or that's been true so far about crowdfunding is, like you said, not all of the tier A companies and startups are willing to do it yet. But I do think the future 10, 15 years from now, or potentially sooner, is that crowdfunding is analogous with letting your community buy in. Because you can make the case from both sides, right? The one side, if you let your community buy in, you create so many more hyperactive advocates that are out there basically marketing your product. But on the other side, you're basically opening yourself up to scrutiny from thousands of Monday morning quarterbacks, right? And you have to reveal those documents.
And Kyle, I want to also share that the concept of access and inclusion also applies for the accredited group of investors. To give you an example, most law firm partners of retired surgeons likely to have net worth in the millions, if not even a little bit more. There's nowhere currently that they can go to find and invest into late stage company. So when we did that deal with SpaceX, outside of Republic, you got to be able to be willing to deploy a 40, $50 million investment to have the opportunity to invest into SpaceX alongside some of the VCs. When that deal was featured on Republic, the minimum requirement went down to $50,000, still 1/100th of anywhere else. So the access enhancement or improvement value very much showcases itself as well. So our goal is just to make people are going to have different spending capability, going to have different risk and return profile, and have different interests. How do we make the private sector right now and over time, this is going to be from real estate, public investing, commodities, everything else. How do we make this more relatable and more accessible across the board with the resources and the access that we have at Republic to facilitate that? So you will continue to see products that have minimum investment well beyond most people, including my ability to afford. But that doesn't mean that's not very much additive, amplifying and synergistic with our mission to democratize investment and aligning passion and profit.
Definitely. I'm curious about your thesis around the kind of the product evolution. So I mentioned it before and you were talking to it. You have several verticals going at once, which allows you to broadcast Republic's value prop to so many different market threads, which is amazing. One of the things when I think about like traditional stock and bond investing, right? There were always individual securities and there were indexes for people to invest in, but so many people didn't know where to start. They didn't know which to pick, and so they wouldn't, right? And then this creation of robo advisors in the early to mid 2000s really changed the game. People could just dump their funds passively and the robo advisors would take it for them and invest accordingly. I think what's really interesting about what you have on your platform, which might be a lesser known product or an earlier stage product, is you're trying to replicate that as well. You're basically building a robo advisor for private deals. And so I'm curious, what is your thesis on? Do you think the average public market or public investor that will get into the private markets is going to take the time to try to sift through individual deals? Or do you think the majority of people will just start doing this kind of robo advising process?
If we introduced and are introducing products and behaviors that people are new, are not, deeply sophisticated in, I think there's only two ways to tackle it, and we do both. One is education and making sure that people are aware of the risk and what they should do. And the second one is adding on products like technical products that makes it easy for them so that they don't have to remember. So to give you an example, the number one rule in private investing or in investing in general, but it becomes particularly relevant in the case of making private investment, is diversification. It doesn't matter if a deal that you love so much and is led by Elon Musk, the risk of total loss of capital if you invest in a single deal is pretty damn high. So unless you're so passionate about it and you put your money in it and you don't care if you're going to lose all of it because you just love it, like buying a product, by all means. But so that need to diversify, we make sure that people know through like banners and education and webinars and whatnot. But separately, we want to make it simpler for people to just, if they have $1,000 that they can deploy in 20 deals, and they can check a box and define the attributes that are relevant for them. Because at the end of the day, if you have the relevant benchmark and that you can invest in a broad, diversified index basis, your probability of yielding a better return than than an average person who pick one-off deals is definitely higher. I think that's the stats that we got from the public markets, the statistic that we got from the venture funds, and that's what we aim to replicate. Now, it doesn't mean that we don't believe in people investing directly and making that decision. I very much do. The reason is that the alignment of their interest and making that investment, making that decision to back a particular founder is such a satisfying experience. And it really does engage and bring that person into the ecosystem a little bit more. The way that we do to basically minimize the risk of not being adequately diversified is making sure that the minimum investment amount is very low. So to give you an example, if you really believe in this one pet company that's in your city and you have the ability to invest $20, that's $20 that most people can afford to lose. And it's a really good way to learn about a new industry, learn about a new way to invest. And perhaps you become more sophisticated and then make investment more broadly and make investments with larger dollar amounts. So one way of learning about investing is just getting started, not reading tons of books. But if you don't really care about a particular company and you don't want to take time to become an expert in it, then certainly doing it on a diversified basis and following validation signals that you find, relevant to you, that is VC or an influencers that you care, would be my recommendation on how to go about private investing or investing in general.
Yeah. It's going to be such an exciting world. I try to draw corollaries for listeners who may not be as savvy in the startup ecosystem. And I think like if you pay for the Patreon of an influencer, a comedian that you love, right? As soon as you pay that $5 a month, you become in their club, right? And you become an advocate to the point where you're going to your entire friend circle and pounding the table for them people to check out the content, and you have no effect or interest in their upside. And we can talk about crypto in a minute, which may change that in the future. But what this effectively does is, like you mentioned, if you put the $20 into that company, you then become an advocate for that company, right? You're pounding the table, you're socializing and spreading that message on behalf of that company. I think it's going to do wonders for the companies when they've got thousands, tens of thousands of people who are just micro investors that, of course, can experience the financial appreciation, but also just feel like they're part of that community. That's amazing.
And now with 6 years of data and learnings behind us and have deployed hundreds of millions into hundreds of companies, that user activation and user engagement, community engagement value proposition is in almost in every single case that founders come back and say, wow, I can't believe it. And I got all of these business leads. And even companies that are not customer or consumer facing or community focused see so much value out of just people's excitement to be part of the journey and do what they can to help the company.
Yeah. Along those lines, so just broader investment market in general. So maybe not even specific to crowdfunding, but since 2016 or so, what are some of the trends around fundraising that you've heard from either investors, either public market or private market investors, or the companies that are raising? And how has that changed over the last 5 to 6 years? I think we're in a crazy cycle right now where valuations have never been bubblier. But what are some of the trends that you're seeing in the last few years?
So I think two main trends, three probably. One is that you're seeing a very clear decentralized approach toward, I should put it another way. You see a trend towards not viewing Silicon Valley VCs as the only thing that matter, and that their venture firms, large and small, and there's been a proliferation of smaller VCs around the country and beyond. So within venture capital itself, within the VCs world, there's been a trend toward diversifying in terms of footprint and focus and background. So that's one. The second one, of course, is the retail trend. Crowdfunding, crowd investing, and I call it micro investing, is because at the beginning there were a lot of negative assumptions about it, that if you receive crowd capital, that's going to be looked down upon by venture firms when you fundraise later. And it's just, not the case. I mean, two of the companies that fundraise early round Republic in the past 12 months went on to raise up rounds from Andreessen Horowitz. And in our portfolio, dozens of companies have gone on to be venture backed. In fact, nearly half of the companies on the tech side raising on Republic in the past year already been backed by VC. So, but that acceptance and the recognition that retail capital brings a very unique value proposition is driving this new trend. The third one is blockchain as a technology, and I think that now there's some truth to it, and a lot of it, I think that people should not be so disillusioned that any company can issue a token and fundraise. But I have left and right, like never before, founders that run businesses, and I think everyone wants to see if they can apply a token economy and fundraise on a token sale rather than fundraise traditionally. Because if you think about it, what is an initial coin offering, an ICO? It is a very successful crowdfunding campaign, right? Back in the old days, random project raising hundreds of millions, bypassing VC altogether from random people around the world. But it was done, non-compliantly by and large. But yes, I would say those are the three trends, and they all have different impacts. All of them are here to stay. And even within the VC landscape, it's going to be so interesting, particularly post-pandemic, to see how Silicon Valley, in general, as an ecosystem and as a funding capital, VC capital, retain or not retain its position on this unique pedestal that it was a year ago.
Yeah, that was my next question, right? So that was a brilliant answer in terms of the trends you're seeing over the past couple of years. When you look forward, let's imagine 5 years. I think what's fascinating is, and you laid it out perfectly, you've got traditional institutional capital and VC. You've got the rise of what people are calling solo capitalists, which are just like people raising rolling funds that have a large media audience and definitely have some investing chops, but are just like one person or a couple people who have $5 to $10 million funds, and then all the way down to micro investing, as you mentioned, which Republic is championing. And there's this broad spectrum now where moving forward, all of those people will have seats at the table. What do you think, if you were to forecast the future, if you have a perspective, I'd love to hear it. What do you think happens, right? Does capital become a commodity, and what people are really looking for is the advocacy? And so they'll create a mix of all three groups, or what do you think will happen over time?
The when it comes to fundraising, the question has almost always been what value, what added value proposition comes with the capital rather than just the money itself. And so I think within the VC space, there's no doubt in my mind that you're going to see drastic shift over the coming years. But I think the true value of venture capital is always going to be there, meaning the ability to leverage the deep network and open doors for founders to advise with deep expertise. So the question is not about the disappearance of any subset of VCs or that somehow retail is going to take over. No, I think venture capitalists or investors in general gotta try harder to actually deliver value rather than just optically saying that I'm a VC and therefore I add value. But in reality, in a round, except for the lead investors, every other VC really doesn't do anything and doesn't contribute in any meaningful way. Well, if that's the case, then the company might as well open up that round and bring in the community so that they can evangelize and have that marketing value. But I have seen small VCs, that is, VCs who may have left a larger fund and now doing a $10 million fund and invest a $50,000 check into a multi-million-dollar round and can be so incredibly value add. So I think it's going to be on a case by case basis, and people with true value now it's easier for them than ever to fundraise. AngelList is a rolling fund product, and there's a wealth of capital, dry powder out there to back value add institutional experienced investors. So I just think that it's going to change a lot, but I think VC and retail will coexist. The value propositions will change with technology and with more people getting into the mix.
Yeah, one of the things I wanted to ask you is around how your team at Republic analyzes which deals you let into the platform. Because I think obviously that's important by itself, but especially if you're having kind of a robo advisor product where people will dump money in and expect Republic to auto allocate that. They're trusting that your filter is good enough where the deals that are on the platform that they're getting invested in are great. I know you guys have a star-studded team for vetting those, and it's a really small percent that you let on the platform. But can you talk about like what do you look for when a company comes to you that determines whether or not you let them onto the platform?
We feature at any moment in time right now. There must be around 60 to 100 deals on available on Republic at any moment in time. And not all of them are the same. In fact, they fall into over a dozen different buckets. Think of like a SKU, a product line that you see a company offer that's meant for different customer base, that's fine-tuned to their interests. So on the one hand, we of course curate differently, and on the other hand, we want to make sure that the right investors can find the product that they meant to look for in an efficient way. So on the one hand, let's say we split companies into, say, three of the larger SKU, so to speak, verticals. One is the vertical of companies that are impact and mission driven. and typically attract a smaller dollar amount per investment, $50 to $200, from people who really care and want to see this company do well. And even though it's very early on, it may not have the revenue record that other companies on Republic may have, but that there's a strong, passionate community of, say, climate change investors on Republic that want to put $20 into every single climate tech company that come across that we trust. In that case, we look at the credibility, obviously, of the team and apply the usual lens on like, hey, do we believe that this team has what it takes to potentially execute on the model and win? And if so, we launch it and leave it to the crowd. Now, when it involves the other vertical, which is only venture backed startups. So you have people who want to invest a couple of $1,000s into each deal, but they only want to invest following the signaling of top tier VCs. In that case, we identify the difficulty for us that is to curate, attract YC backed, Sequoia backed, and Andreessen backed companies. And once we bring them on, we do the basic check on, make sure that they didn't commit securities fraud. No one got accused of bankruptcy in the recent years. No one's in the headline news for domestic abuse, those kind of things. But we obviously apply a very different curative lens. If the company has already showed that they've exceeded, they already show a transcript of A++ across all the different criteria. In that case, we present them and we advise people to invest, programmatically in a diversified manner, perhaps through the autopilot product. But at the end of the day, the running and growing an investment marketplace, we have to deliver in the long run on two things: that we do, in fact, yield return for our customers overall, and that our customers' expectations are met. So a lot of our customers expect us to stay true to our mission of, showing that venture capital and investing work can be more diverse geographically, in terms of ethnic background, whatever else, industry, representation across America rather than just the two coasts. And so there's a lens on our side to make sure that we present those opportunities and leave it to the wisdom of the crowd with a curative lens on our side, with a conviction that down the road you're going to see a much more diverse ecosystem or a much more diverse portfolio of company on Republic that end up out deliver even the top quartile of venture capital return in the long run.
Yeah. Yeah, I encourage anyone who's listening who's interested in private market investing to go to republic.co, because the way you structure each opportunity and then the notes below, you really do a great job of effectively synthesizing a deal memo that someone would see in traditional private investing. And so it will give kind of people who are beginners in private market investing a good way to understand, does this company make sense? Is the business model sound? Who are the other investors? So I really love that. And I think people should check out the platform to dive deeper into that.
Thank you, Kyle. And we are working day in and day out every day to make sure that we do more to package information in a way that is digestible, because we understand people's attention span online now runs in like 10 seconds, 20 seconds. So how do we present information in a way that is compelling and digestible quickly? And that's always going to be a work in progress.
Yeah. One of the other reasons why I was super excited for this call and this conversation was the crypto angle. So I know you're extremely bullish on crypto. I am as well. I think a lot of as I mentioned at the very beginning, I think a lot of the democratization of investing and wealth creation is going to come from crypto and crypto-related innovation. So I'd love for you to just talk broadly how you see crypto, both playing a role in this space and broadly some of the use cases that you're most excited for that you think will be here in 3 to 5 years that would, blow people's minds who aren't in the space.
Let me unpack the term democratization of access to capital or investing. It ultimately means that anyone can participate. And the reason why that's exciting is because if you allow everyone to unlock and participate, you're just going to have a lot more energy, that is money, into the ecosystem, and a lot of good things going to go out of it. The barrier, the challenge to that is that there's a reason why the minimum investment, on any private platform is like $5,000, $10,000, because transacting, making a transaction, trading in private asset or any asset is, clumsy, clunky, and expensive. Blockchain holds the key to that, in that it has two attributes among countless: the ability to fractionalize anything down to tiny pieces, a single share down to a million pieces. Imagine the Mona Lisa being fractionalized, represented and fractionalized down to a millionth component, let's say 10 million. That means that you're going to be able to buy a piece of the Mona Lisa for probably $10, and actually own a portion of it. And imagine how many people around the world would be able to participate. The second attribute is the ability to automate things like, you know, accreditation, verification, KYC, AML, and can settle payment very quickly. So I mentioned at the outset that my family immigrated from Vietnam when I was a kid, and I remember my mom. In the 90s, and Vietnam was a very poor country then still, sending $100 bill every month, whatever she saved, to her two sisters. One of them lived in a big city, the other one lived in a smaller city up north. And the one that lived in a big city, for every $100, I think the fee was $20 to deliver it to her. And the one in the smaller town, a little bit mountainous, the fee was $35 to deliver $100 to her. Now, right now, Vietnam is the second most active crypto country in the world. Of, I think, something like 30% of the people that either have owned or use crypto for payments. Imagine a fraction. I mean, as technology evolved now, even a high school student or a college student in a small town in Vietnam or Ecuador or Alaska or Alabama can make a $10 investment with less than 50 cents in fee. That ability, combined with fractionalizing different assets and products, naturally are the two necessary rails for the full potential of a world whereby you have billions of people participating at scale, small amounts, in a sensible way, in an overall economy. Because of that, I think that the technology is not only truly important to Republic's future and what we're building, but I think it will change the financial services and the financial markets that exist today profoundly, probably more in the next 5 years than what you've seen in the past 50 years. But time will tell. If not 5 years, it'll be 10 years. But it's a one-way train towards true disruption through the power of retail and global access.
Yeah. And you referenced tokenization a little bit earlier, that you've been talking to a lot of founders who are trying to figure out, is there a way to create a token economy inside my business? Can you just, for the listeners who, aren't as deep into crypto and aware about what that even means or what the implications could be and how great it could be for communities, talk about that a little bit, and, what you view are the reasons why certain businesses and certain founders it might make sense for, and others why it might not.
Absolutely. The easiest way to look at token, or what tokenization means, is that a token economy, that if you have a community, if you have, whether it's you're an investment platform or you're a business with a lot of customers like the Uber and Facebook of the world, a token economy simply means that, is there a way to introduce a digital representation? Think of it as like ally mileage points, any digital representation, in a way that it incentivizes all participants in that ecosystem to do more. And as they do more, they earn more. Now, there are ways to do that without the token being a security and as such regulated, but very, very few. Most of them, it implicates securities law. But to give you an example, I'm a frequent flyer on a number of airlines, but United Airlines being one. Obviously, I earn the points, and as I earn the points, I spend them. But when I earn these points and I spend them, it's not like my points is nothing to do with you buying a full fare ticket. It's just a way for to reward me. If there's a way whereby the more people fly on United Airlines, the more points that you get, or that the more value out of each point, you're probably going to be much more proactive in telling your friends to like stop flying JetBlue, American Airlines, get on United, even if they don't need to provide your account, because you know that more people go on it, it's gonna activate the value of what you own, which is in this case a token. Not in a similar way. But a public company in its fullest potential does have that attribute, right? If you own shares and other people, you own Starbucks share and other people come and buy Starbucks, then technically your share price would go up. The problem with that is that very few company can get to the point of being a publicly traded company, and even then, when it's so large, it's hard for people to care. Not only that, it's still very limited in its ability to trade the stock internationally. Most international folks cannot buy publicly traded US companies and vice versa. So this whole landscape of tokenization and applying a token economy now makes it feasible, not that it's workable in all cases, but technically it should work for any community, large and small. The question is, are you at a point whereby undertaking the cost of doing so makes sense, or should you grow your community into something much larger, grow in the traditional way, and at one point when it is truly value add, apply the token economy? But it works even for restaurants, if at restaurants feel so inclined to do it.
Yeah, and along those lines, so I saw on your site you guys launched Republic Note, which is basically a profit sharing token for Republic, right? That pays out when startups and different private equity raise on Republic and then go public. Can you talk about that and how that works? Is that something that's accessible to anyone who invests on Republic, and what are the mechanics behind that?
So the answer is yes. Hopefully, it will soon be accessible to everyone. I can't fix an exact timeline, but hopefully this year, which is over the next 5-6 months. Now, the Republic Note is basically just like as you define it, our own revenue sharing token. And going back to my answer a moment ago, the thinking on our end back in 2017 was, how do you add value and create a way so that if a person, after listening to your podcast, come to Republic and invest $50 into a mission-driven pet care company very early on at Republic. Well, she feels excited about making that investment, but she's not gonna see any exit for a while. Most companies don't get acquired for a few years and certainly won't go public for like 6, 7, 8 years or longer. So how do we navigate the lack of liquidity and provide something that makes our community more excited about it? So introducing a token that aligns with the success of Republic and has the ability to pay out dividends as Republic grows and generate more revenue is clearly one way to do that. Going back to that example, now if she doesn't want to invest another $50 because she doesn't have money during the pandemic, and all of her money goes to her saving account. But if she ask her a college reunion class and talk about Republic and send 100 people to the platform, naturally every dollar that they invest goes to the value of the token and really amplifies it. If she happens to be Kim Kardashian's cousin, second cousin, and somehow lined up that introduction, if all of a sudden Kim becomes an ambassador for Republic to talk about impact, way of putting power, aligning profit and passion, and being empowered to do that. Just that act alone probably, I don't know, would drive her token value and everyone's token value up 10x over time. So all of a sudden, all of these incentives apply for people to just think of ways to be much more engaged, knowing that the more engaged they are, the more immediate, clear, and in many cases liquid addition to the token that they hold.
So when she, in this example, when she makes the private investment in a company, she'll buy basically shares of the company she invested in, but then she'll also get the equivalent amount of Republic token or however much it is. And there will be
Yes,
people who don't make investments that could also buy the token if they want to buy in, right? Something to
exactly.
that extent.
Yes, you're going to see the full roadmap, but our plan is for anyone who make an investment of a certain amount to receive naturally a number of Republic token. If they send us a number of users, they also earn tokens in that way. If they are not ready to invest just yet, but want to contribute and be active on Republic by contributing information about different deals so that the public can be more informed in making the investment decisions, they can earn tokens. Currently, to give you an example, the law requires, rightfully so, that every single deal publicly featured on Republic has to have a public discussion forum so that contribute information and kind of like open the kimono on the things that they know. Well, how many people who are just going to volunteer to put on information? There's some, but not a whole lot. Imagine if you, whenever you contribute a piece of data that ultimately the investor collectively decided is valuable, that you actually earn token, even if you don't want to invest in that deal, gonna be better for everyone, would it be? So there are myriad ways in a token economy, in an ecosystem, depending on what it is and what it does. In our case, there's so many ways that will over time show to benefit everyone involved just by aligning people's economic interests through a common token that circulate through the platform.
Yeah, that's awesome. I'm excited to see the full roadmap when you guys have it. I know we're close on time, so a couple more questions for you, and then we'll get you out of here. The first one is this impact of Naval. So Naval, people who don't know, Naval's founder of AngelList is just this iconic figure in Silicon Valley, but also in the world. His philosophies are widely revered, and he's honestly a legend. And I know I watched a few interviews with you and prepping for this. You obviously were the general counsel at AngelList, and so grew close to him, and have even credited him with really helping you get Republic launched. And so, I'd be doing a disservice to Naval and for everyone on the podcast if I didn't ask you what some of the biggest learnings and lessons and takeaways that you had from your time working with him and your relationship with him.
Well, there are just so many. I'm super grateful for a number of people who have opened doors and kind of like guided, shine a flashlight on a certain path, and then I walked down that path, and next thing I know, other doors are open. Naval is, both a former boss and a friend and a mentor, and in some way kind of like a life philosopher, a guru for a lot of people, including myself. Whether or not he knows it, I'm sure he knows it. But I think the ease of approaching life in general, and given that anyone who builds a company, being a founder, your work then becomes your life. It's actually a good thing. It's not a bad thing when you don't have to distinguish between the two. If you have to struggle to say that I am going to give up my personal life and turn work into your life, that sounds like a really bad, an unhealthy thing to do. But once you care about something so much that it naturally takes your attention span, then it does become your life. But in that journey, or in your personal life, there are going to be tons of like ups and downs. And I think the zen is on how to go all in, building with intention, but also not to be so entangled, and have a clarity of mind. I think is something that I have learned not just from talking to him, but from listening and reading the many pieces that he have been producing online and otherwise.
Yeah, his tweet storms, among other things, his tweet storms are famous, and he's as you mentioned, he shined a path for so many like prolific entrepreneurs. If I'm sure if you were to draw a web with all these people that have founded massive companies that attribute success to Naval, it would be incredible. So
There's a more practical benefit or learning that I should share. I didn't know anything about Bitcoin in 2012. I was still in academia, and in the conversation with Angel is I was then, a meeting was set up to interview with Naval. And I knew that Naval was big on blockchain. And so I was like, all right, I got to go through the experience and just buy a number of Bitcoins, just at least be able to tell him that, yes, I do own some and know what the heck he's talking about. And so I bought a few. I think it was at like $185 and I kept them. And so thank you, Naval. A decade later, they're worth a lot more.
Yeah, that's amazing. It's good you were able to hold them. A lot of people those early days traded them on the way up.
Well, I got too busy at AngelList. I was slammed with all the legal things and the international expansion. So I forgot about it, quite frankly. And at the time when I bought it, it was, altogether not a whole lot of money. And so I just didn't even pay any attention to it. But then I obviously started to. And then I think, obviously, jokes aside, the interest and the understanding about the technology and I think before working for Naval and being involved deeply at AngelList, I just didn't think that we have the ability to change things when it comes to major institution like securities law on how venture capital works, right? Yes, of course, you can build a new thing and have a vision on how this bottle is going to look differently, but you're talking about the United States Securities Commission, Securities and Exchange Commission, 80 years of history. You talk about venture capital. What do you mean by introducing a new product that either get them to see things in a new light or like going head to head with the Andreessen Horowitz of the world? But obviously, Angel is and the work there was really opened my mind to the possibility of things. And if you really commit to anything and have the right intention about it, I think things are just going to play out.
Yeah, I totally agree. All right, so the last question, the last section, that's my favorite is the brainstorm. And so we frame this to founders. So imagine Republic was gone tomorrow. What's another idea or business in a separate space that excites you, that you would chase after if you had to build something from scratch? And we can riff on how you bring it to market.
I think the concept of equinox or CrossFit, but for the mind and meant to produce happiness and productivity in a very easy, digestible, methodical way would be amazing. I think that it is a shame. I, spent a lot of time living in New York and in the Bay Area, obviously the greatest country and two of the most, wealthiest regions in the greatest country on earth. And everyone, 9 out of 10, walks around on the subway and otherwise with such a long face, so unhappy about everything. And that is insane. We woke up today still alive. Whatever problems you have, you look around, for most of you, people you love, still alive. And look out to the larger circle of friends, everyone's still alive. A ton of people just die when they went to bed the night before and didn't wake up. It's true. Something like 100,000 people on earth just didn't wake up after a night of sleep. And somehow you're still alive. What? It's just a mindset and the ability to disentangle yourself from the narrative in your mind about whatever it is you're building, even as a founder building a business. I think there's a clear methodology for that. Just like to get fit, you got to go running or just get some exercise in. And I think for most people, the concept of happiness until now is that, oh, I got to find another book that's amazing and illuminating, and I read that book, I'm going to be happy. You don't read a book and get physically fit. Why would you read a book and get mentally fit, right? And it doesn't have to be anything deep or mysterious. Again, getting fit physically, you can run around the block 10 times every morning and 5 days a week, and you're definitely going to be healthier. So there are different ways, I think, through my journey now, having always worked in a high stress environment. I probably have done an 80 plus hour work week for a good 15 years, and not an ounce of exaggeration, I haven't had like a 3 day vacation or personal day off in 4 years or so. But it's not like, it doesn't feel like a grind. And I think through the process, I've also learned how to figure out ways to be happy while still doing what I needed to do. So, long-winded way to answer your question, it would be like a fitness center, but for the mind. And it's not about alignment or whatever. It's just about being happier. It's more productive, and I think everyone, hopefully, save for rare exception, definitely can be a lot happier.
Yeah, I mean, you seem like a really happy guy. I'm curious, like in practice, how would you because that right, that's the $1 billion question, is like, how do you translate the actions or the micro actions or the mentality of being happy? How do you translate that to some kind of an activity or a regiment that someone could go do on a schedule? Like, if you had to build this, just to press on it a little further, like what would you, how do you envision that looking like?
This is my just vague theory, and I haven't spent enough time to dive into it because I've been building Republic. So, if it doesn't work for you or those listening, just know that it's still very much as a beta concept. But if you look back, I think that people have found, whether you go to a church, a mosque, whether you go to a music concert, a sports game, or go to the mountain to look out at a vast expanse field. The reason why everyone feels happier, more relaxed, because for just in those moments, whether you're like revving with the entire stadium and kind of lost in that mix, the music is terrible at a live concert anywhere, but it feels good because you're not just you, right? You kind of like wash away the whatever concern that you have in your mind. Or if you go to a church or a temple, again, forgetting about the dispute you just had with your significant other or the neighbor, and free up your mind. And that's what people do with meditation. But at the end of the day, it is how to shut off the voices and the thoughts in your mind when they're no longer serving you for that particular purpose. So I was a litigator, briefly, but I did a ton of pro bono work over the years in litigation. Obviously, when you go to court, and if you defend something, and you got to be on, and you got to be ready, and you got to deliver and run these thoughts in your mind, the moment you walk out of that and you go see your childhood friend you haven't seen, you got to be able to put away that hat, and stop the thoughts process in your mind and engage in a different way. And I think naturally, I think people are unhappy because they carry unnecessarily just baggage from one scenarios into the different phases of their life, and not realizing that that's not your mind should be serving you. You should not be beholden, meaning you should have true agency over it. So I think there are different ways uh, that one can do, and it's been tested out over the millennia, across all different civilizations and societies, and different methods on how to undo that voice in your mind. But yeah, there's a way to do it that is, I think, more relatable, more mainstream, so that it doesn't sound like some kind of hippie, new age concept, so that anyone can do it. Not unlike the way that CrossFit introduced gymnastics to the masses, and that Equinox makes fitness fun, cool again for everyone in big cities, that kind of thing.
Yeah, that's amazing. Some kind of cross between like Headspace and Calm, and then Equinox and CrossFit, where it's like a little more intense, not intense, but a little more regimented than Headspace and Calm, but
Yeah.
uh, has that element of like the gym.
And has space and calm doesn't work for everyone, right? The notion of like everyone sitting there, listen and meditate, it is really hard. Even for me, doing meditation for more than 10 minutes is a very hard thing to do. But there are different ways to do that. Meaning, if you walk outside in the morning, or that here's another example. Anyone who's upset about anyone else, and if there's a space for them to just show up, and if there's a slight deep dive into why they're getting upset, it is very clear that something is hurting their own identity as a self, as a person, as a man, as a lawyer, as whatever it may be. And isn't it ironic that someone did something that you find, offensive, and now you're allowing the person to make you feel bad, which your body reacts by creating poison within your body. So the person is winning by poisoning your body all day out, and you happily doing that. Like, shouldn't you have some agency over? Was like, no, what am I doing? Just look at like the sun rising and the amazing things that's going around us that we don't see every day because we're so focused on things that are no longer relevant in the moment at hand. So different ways that goes beyond forcing just meditation techniques, which I think is awesome for those that can have that consistency. But many people in the fast pace of life and in many regions of the U.S., meditation is still a very foreign thing.
Yeah. Man, I love this brainstorm. We could go forever, but in the interest of time, we'll wrap it there. So before I let you go, I just want to acknowledge you for a second. I mean, you're such a positive person, but so pointed in your approach and expectations on kind of manifesting the future, especially of wealth creation and investing. And I think if people take nothing else away, the bold vision that you've painted for Republic, where millions, if not billions of people around the world will have access to the private markets, the public markets, and then this, as we talked about at the end, kind of this chase to happiness. I think that is an incredible message. So I just want to thank you again so much for coming on. I'm going to continue to be a massive fan of yours and Republic's, and I wish you all the best.
Thank you so much, my man, for having me, and for being a champion and allowing me to share our perspective and our mission. And we certainly hope that everyone, if not on Republic, then somewhere else, think of how their money actually matters a lot about building the future. And if they're so inclined, support whatever it is that speaks to them.
Absolutely. Kendrick Nguyen, co-founder and CEO of Republic. Thank you so much for coming on the show.
Amazing. See you soon.